Welcome back to another video, and in this video I'm going to break down some of the next opportunities across regional Victoria which you can consider for under $500,000. And in this video specifically I'm going to talk about three opportunities, and the first one I'm going to talk about is actually Shepparton. But just before I get into that, if you have not already, check out the Property Blueprint, right? It's an education program that will teach you how to become the top 1% of investors out there across Australia. It also includes membership into the private community, which has over 200 plus members. So you'll get advice and mentorship by myself and other members as well. It's an absolute banger of a price at $4.99. It is one of the most affordable property education courses out there. So if you have not already, go check it out. There's 8 in-depth modules with over 60 plus videos and hours of content. There is so much practical knowledge that you can apply directly into your investment portfolio. And even if you have 1 or 2 investment properties already, this is still helpful. So go check it out. Let's get straight into the video and let's talk about Shepparton. Now, Shepparton is about 2 hours away from Melbourne CBD. It is a location with about 70,000 odd people, and this location has a number of properties under $500,000 for you to consider. And just to show you what that looks like, I've just put on realestate.com a house under 500 or about $500,000, 3-bedroom plus. And as you can see, there is a lot of properties actually available. Now, obviously, not all of them are good. There are good and bad pockets of Shepparton that you must consider. For example, this cluster up here, there are a number of properties across Olympic Avenue and Glory Way, which are public housing. So you don't want to consider them, right? They're not the best properties to consider. As well as down here around Poplar Avenue and Westmoreland Crescent, there are some more properties around that price. They're not as favorable because of the public housing or ex-commission housing commission areas. However, there are good properties, for example, like this one on 56 Patterson Road, which is around $430,000 to $460,000. And as you can see, it's quite a nice brick house with a decent interior that can be uplifted for cosmetic reno, or you can put a tenant in straight away. And something like this is going to fetch you around $450,000 to $480,000 in terms of rent. So the yield is actually very good within Shepparton. And to show you what that looks like, this property over here on Porter Crescent is $490,000 and it's a 3x1 property. So very similar to this 56 Patterson Road. And you can see it's also a very similar interior, not that new, very similar condition to the one on 56 Patterson Road. So you're expecting around $419 for a $460,000 to $430,000 property, which is very good. And say you purchase this property for around $450,000 with a rent of $490, you will achieve a rental yield of about 5.6%, which is amazing when you consider the rental yields of Victoria. Shepparton has some of the best rental yields across the entirety of regional Victoria and Victoria in general. In Victoria, you generally find the yields between 4 to 4.5%. And so when you're achieving yields of 5.5, 5.6%, that's a very good property for an investor to be able to hold. Now, of course, Shepparton is not all perfect and rosy. If we look at VicPlan and we look at the overlays of Shepparton, we can actually see that a large portion of it does fall into a flood zone or a floodway overlay. Now, this makes it difficult for some of the properties to purchase because you don't want to buy a property that is in a flood zone, for example, or if it's in a housing commission. What that does mean, though, is that there is actually a very limited number of stock in Shepparton that it can be found in good areas. And once they start to go, we will start to see house price pressure increase within this area, and we will see house price growth start to occur. And in this day and age, a $450,000 to $460,000 property, which is a nice brick house, it's pretty rare in this day and age. The other thing I wanted to show you with Shepparton as well is that apart from the amazing yield that you get with this location has had a bit of growth during that COVID phase, but then it's gone through quite a flat spot over the past 3 years. But we have started to see rents rise over the past 12 months, which is really good to see as an investor. Not only that, affordability is very good for the area. It's under 30 years, which is very affordable. Now, the rented to owner occupier ratio and the ERSAT score are not the best, but for a regional area, it's not bad. Those are trade-offs in my opinion. And as we can see, the data is not looking the best, but it is getting better. And as I said, once those good stocks starts to disappear, then we will start to see the house price start to grow and vacancy is very low. So overall, Shepparton is a great location to consider for under $500,000. $500,000. But what are the other locations? And just before I get into the two other locations that I want to talk to you about, if you have not already, make sure you are subscribed to the private community because it's an absolute no-brainer. There's over 240 members within the community helping each other out, sharing information, sharing resources, having boots on the ground, having access to property templates, resources, and weekly community calls at the touch of your fingers. You have private mentorship and advice a moment away. I will answer to all questions within 24 to 48 hours, and we also have mortgage brokers in the community to help you assist with financing questions. So for just $35 a month, you get an absolute banging value. There is so much help, so much resources, and just to show you what the community looks like, we have questions being answered every single day. We have finance questions being answered in the Ask the Mortgage Broker channel. We have renovations and repair, negotiation tactics. We also have deep dive suburb questions in the channels in their respective states. So it's an absolute no-brainer for you guys to be a part of the community, because if you're deciding to invest in 2025 and you do not have a network to touch into to get advice, help, and mentorship, then you will make a bad mistake, a bad choice, which you will regret. And you don't want to regret a $500 to $1 million purchase, because that is a regret you don't want to have. So make sure you go subscribe. Try it out once, and I know you'll stick around. Now, Mildura is the next location I want to talk about. And this location, you definitely can find properties under $500,000, but they are quickly disappearing. And I think honestly, by the end of the year, it might be very difficult to find them with the way the activity is happening in this area. And I have noticed some underquoting in some of the properties, which is disappointing to see, but that's what you find in Victoria in general. But let's talk about Mildura. Mildura buy price around $472 with once again a 5% yield. So just like Shepparton, it has that very strong yield which you don't normally find in Victoria. And when we start to scroll down, we can see a population of around 34,000, but it's a bit more than that. The interesting thing with Mildura is that over the past 10 years, it has consistently grown every single year. It does not have the same characteristics as other regional locations across the country it has. It does not have any flat spots over the past 10 years, unlike most other regional locations. However, it's still a good location to consider in terms of an investment point of view because of the diminishing amount of supply in the area, as well as the strong affordability of this pocket. I mean, we can already see properties are being sold in less than 2 months, and the stock is starting to diminish. And as demand continues to rise, this will be a location to consider. Now, one negative I can see off the top is a vacancy rate at 2.4%, which is a little bit high. As an investor, it's a little bit high. We want to see less, but very similar characteristics as Shepparton with the 37% RO ratio and an ersatz score of 2. Again, those are trade-offs that you just want to discount, or you just want to like trade it off essentially. And once again, with Mildura, you can see under $500,000 for a property with 3 beds or more, there is a number of opportunities to consider for under $500K or just about $500,000. There are some cheaper properties. Double check the areas they're in. There could be housing commission, which is not what you want as an investor. But one property I have here, for example, is this one here, 430 to 465 Mimosa Avenue, a 3x2x2. So a very standard sort of investment property that most investors look for. Great owner-occupier type property as well. And something similar like that will go for $470 in terms of rent. And when we put the numbers in the calculator, we're getting once again a 5.4% yield or close to a 5.5% yield. And when we talk about Victoria, that's a very good yield. So both in terms of supply, demand, affordability, and yield, Mildura stands out to me as another location that you can consider. Now, of course, like always, do your due diligence about the area, whether it's good for a short or long-term hold. I haven't got a deep dive video on Mildura just yet, but I will be doing one soon. So stay tuned for that. Now, the last location I want to talk about specifically is in Geelong, which is Corio. Now, Corio is a location that definitely has its pros and cons, and I'm going to break it down for you. And if you didn't know as well, I did a deep dive of Geelong earlier this year or late last year, where I really told you about the issues with it, which was essentially the cash flow position at around a 4 to 4.5% yield. But that was at the time when there was really no market signals that there was activity happening in the area. But at this point in time, we're starting to see a little bit more interest and a little bit more better data as to actually us considering Corio. And when we look at this location, we can see the buy price is around $522, but you can definitely find properties between between $450,000 to $500,000 with a yield of around 4 to 4.5%. And when you look at Corayo's data, you can see it did go through that COVID boom, and then it's gone through a bit of a slightly downtrend and a bit of a flat spot over the past couple of years, with the 3-year growth sitting at -4%, which isn't terrible at all, but it's just what it is. Now, with Corayo, the main issue is its socioeconomics and its RO ratio, which is very high for the RO ratio, and the ersatz score is very low. It's not the friendliest part of Geelong by any means. Now, just because the area is lower socioeconomic doesn't mean we discount that location, but we just want to be more intelligent about the time that we invest in that area. We can already see affordability is sitting around 40 years, but in terms of the buy price, it is still quite affordable at around $450,000. And over this past couple of months, we can see stock seriously start to diminish over these past few months, as well as demand levels starting to drop further and further. Vacancy is not too bad at 1.5%, and that's pretty good for an investor for when we're looking at it as an investment location. And inventory is falling as well. So when it comes to the data is actually starting to look better and better. And if this trend continues, then I would likely see that Corayo's price start to increase over the next few quarters. Now, it's still very early in the cycle, and this may not pan out the way we expect it to pan out, but it is a location which you can start to look into and consider as a possible next opportunity. And when we look at the maps as well, again, you can see the numbers up there. I've just taken this property here, around 479 to 519. It's a bit more of the renovated type properties which you can find, but it's still a nice sort of brick home. I mean, the roof might need a bit of work on it, but still quite nice. Say if you bought this for $500,000, you can expect a rent of around $450. And I'm going to show you this property as well, just so you can see it is fairly renovated in the inside as well. So it's a pretty similar term comparison. And when we put those numbers in, we get roughly around a 4.5 to 4.7-ish yield, which is still better than vast majority of Melbourne, but it's still lower than Mildura and Shepparton. As an investor, money is still money, and that's a factor we need to consider. And especially when we're talking about Corayo, which is not the most favorable location of Geelong in terms of an investment standpoint, as it's a lower socioeconomic area, we might not attract the best quality tenants in comparison to Shepparton or Mildura for a similar price point but better yield. But this is another location that you can start to consider for a potential investment. Now, of course, please do your due diligence about this area, because both Corayo and Nora Lane do not have the best socioeconomics, but if capital growth occurs, that's what we care about as investors. So do your due diligence. And as you can see, there are definite pockets along Corayo that you want to be investing, and you can see most of Nora Lane is in the red. Be smart about where you choose to invest, because once these good pockets of Corayo start to disappear, capital growth could quickly start to appreciate. Now, as I'm talking about regional Victoria, you would have started to notice a running theme of what I'm looking for. One is obviously the price, under $500,000 opportunities, but the other things that I'm looking at is both yield as well as good regional locations in terms of economic diversity, which I haven't really talked about this video because I want to deep dive into each location. But these suburbs and these locations have good underpinning fundamentals from both a short-term and a medium to long-term time horizon. Now, of course, once those price growths start to occur, I'll reevaluate my position. However, these are not one-trick pony economies. They do not just rely on mining, for example. They do have a fairly diverse economy. So from that standpoint, you can consider these locations for a short to medium term investment as well. Now, of course, like always, do your due diligence, double check the area, check your numbers, check the type of properties that you're buying and the streets that you're buying. But these are your potential next opportunity. And remember, these locations are not growing hundreds of thousands of dollars every single year. These are markets that are second wind markets, as Arjun Paliwal likes saying from InvestorKit. They grew during COVID, and then they've gone through a bit of a flat spot, and now they're starting to look very good from an affordability, from a yield, and from a numbers perspective, that it is still a very counter-cyclical approach. Because let me tell you, still to this day, there are people investing across regional Queensland, even after the properties have doubled and tripled in value over the past 3 years. This is still very counter-cyclical. It's still early days. So please do your own due diligence. Think about your financial situation before investing and make intelligent choices. And to make intelligent choices, you need to be part of the private community. At $35 $10 a month. If you're buying a $500,000 asset, it's a no-brainer to be part of it. Other people are charging $10 to $15 to $30,000 to do the same job that I help you with. And they don't even help you. They just outsource it to someone else. So make sure you are part of the private community. There's over 240 members of the community. It's an absolute no-brainer for you guys to be part of it. And if you have any questions, I will be there to help you. Till next time, thank you.